Hi everyone. Today I want to give you a general introduction of R&D credit. It is very basic. I'm going to talk about what is R&D credit and how to calculate it. What is R&D credit? The IRC Section 41 name is Credit for Increasing Research Activities, which is also more frequently known as the R&D credit or simplified research credit. It was created to stimulate R&D in the United States. The R&D tax credit offset federal income tax liability and sometimes payroll tax liability. Most states also provide a similar credit. The R&D credit equals the sum of amount calculated using two different kinds of expenses: qualified research expense and basic research payments. Qualified research expense must be for specific commercial objectives. Qualified research expense don't have to be for the advancement of scientific knowledge. They can be for product, process, and software development or improvement. On the other hand, basic research payment is the amount paid to a qualified basic research organization, such as college or university or a tax-exempt organization, to conduct scientific research. Qualified research expenses are more common than basic research payment. Qualified research expenses include taxable wages, cost of supplies used in qualified activities, 65 to 100% of contract research expenses for qualified activities, provided the taxpayer retains substantial rights to the activities results and must pay the contractor whether it succeed or fail. 100% qualify if research is done in-house. 65% qualify if research conducted by outside party under the contract. Rental or lease costs of computers used in qualified activities. For example, payments to cloud service provider for the costs of renting server space to develop a component. Generally, there are two methods for computing QREs. Um, Regular and alternative simplified method. The two methods are similar because they are calculated credit as a percentage of the excess of qualified spending in the year for which the credit is being calculated over a base amount. I will show you an example of how to calculate regular credit. First, you calculate QREs. Then you calculate the base amount. And the base amount is equal to average gross receipts times fixed base percentage. You can find the percentage amount on IRS Form 6567 instruction. The fixed base percentage cannot exceed 16%, and the average annual gross receipts is for the 4 taxable year preceding the taxable year. Lastly, you calculate QREs less base amount. And so the calculated amount cannot be less than 50% of qualified research expense, which is A. For 2021, the regular credit statutory rate is 20%. The alternative simplified credit is 14%. However, the regular credit higher rate in 2021 doesn't mean that a particular taxpayer's regular credit will always be greater than its ESC. Its regular credit could be greater, but it can be much lower. This is because the regular ESC calculate their base amount differently. The regular credit base amount is calculated using the taxpayer's gross receipts and QREs. The alternative simplified credit base amount just use QREs. That's why its name is Alternative Simplified Credit. The EIC must be elected for a taxpayer either on an original return by completing the EIC section of the Form 6765 or on an amended return. Regular method doesn't have to be elected under any circumstances. For tax year beginning after December 31st, 2017, corporate taxpayers will remain subject to a credit limitation that specify that the credit cannot exceed the excess of taxpayers' net income tax over 25% of the taxpayers meet regular tax liability above 25K. You can see the allowable tax credit computation is using tax liability before tax credit. This is directly from M1, and the limitation is B. B is equal to tax liability before tax credits minus the 25K, and C is equal to B amount times 25%. Tax credit applied is equal to A minus C. So this amount also go directly back to M1. In some circumstances, R&D tax credit can offset payroll tax liability. The payroll tax credit election is an annual election made by a qualified small business. The amount of research credit cannot exceed 250K, may be used against the employer portion of Social Security liability. A qualified small business is a corporation that is gross receipts the gross receipts of less than 5 million for the tax year, and no gross receipts for any tax year before the 5 tax year preceding ending with the tax year. The question is, does a company have to be a startup or a small business to be eligible for a payroll offset? The answer is no. Even companies have been around for more than 5 years and have spent billions of dollars to try to develop or improve a component could be eligible. Any other person may be considered a qualified small business if the person meets the requirement of 1 and 2 in the previous slide.